Yo, what's good YouTube? It's your boy Oscay, aka Mr. Studio Pips, aka multiple funded and multiple payouts in less than a year, bringing y'all the H4 Power of 3 model, which y'all been asking for, so y'all better pay attention. Stick to the end of the video if you want to see a trade breakdown of this beautiful trade I caught. What I will be going over in the video is the Power of 3 H4 model. Then we'll be going over the entry pattern, and y'all already know the unicorn, my beautiful entry pattern. Then I will explain something about the SMT confluence, which helps me weeding out like not high quality trades. And now I'll go over the trade breakdown, like I said. Power of 3. Everything in trading, in my opinion, is a power of 3. Because every single candle, it opens up, manipulates in my eyes, and then distributes, and then it closes. Now, not every candle will be this beautiful. So I'm not saying go and trade every candle, but this is the logic that I am looking for when I'm trading. And if this plays out, you already know how I'm rocking. I'm putting my limit on the unicorn and we making some bread. Demo money. We making some demo money. I'm trying to get the feds in my house. So in this particular model, we'll be looking at the 10 o'clock open candle. And it closes at 2 o'clock. So once the candle opens, I want to see a manipulation down or up if bearish, but we're using the bullish example. And then I want it to displace up, giving me a sign that there's something going on. And then I'm just looking for the unicorn. It's that simple. All right, so let me give you guys a real example of in the markets. As you guys can see, the candle opens at 10 a.m. here. We manipulate down, displays back up, leaving a balanced price range. And the rest is history. Let me put some fluff on it so you guys can understand. In my eyes, this is the breaker. We sweep a short-term low, and then we displace up. As you guys can see, after we displace above the breaker, we tap back one more time. Like, make it make sense, bro. Like, it can be this beautifully delivered in my eyes, but like, there has to be something going on with price. It has to be like a little algo, but let's not get into it. Let's not get into that debate right now. As I said, the entry pattern, a simple unicorn. We take out this low, displace up, leaving a breaker and potentially a fair value gap, balanced price range, anything. If there is a narrative in play, you already know how we're rocking. We put our limit, or you market execute. I don't care, wherever you do it. Stop asking me where I do mine, because I have data on it. I went over hundreds of trades looking at where I can put it. So do your own research, go into these pairs, backtest them, and then you will see where you might have the best risk to reward considering your entry. And that's how you improve. You don't just listen to me, you go and test it. All right, now we got into SMT, smart money tool, smart money technique. I don't know whatever it's called, but I just know it's SMT. So let's say we have two correlating pairs that have to move in tandem. When we see one of these pairs raiding, as you can see, we have a low, high, lower low, higher high. That's the unicorn, by the way. So if we have a unicorn, a raid, and we don't have it on the other correlating pair, that means there's something going on, because they should move in tandem. And this is a dead giveaway to me that there's something going on in price, so I should be paying attention. And if I see that displacement, so I will drop a little gem right now. If we are buying in this scenario, we want to buy the pair that didn't manage to raid the low. Why? Because it's stronger in this case. So this pair right here that failed to raid this low is stronger than a pair at the bottom. So that's the one we want to be buying if we want to maximize our potential profits. Now, I'm not saying this is how it always happens, but this is what I go by. You can test it out, you can see it for yourself, but I thought I'd drop a little gem in there, you feel me? So a real life scenario right here. This is the S&P 500 and this is the Nasdaq. As you guys can see, we have a low, high, failed to make a lower low. What do we have here? We have a low, high, lower low, higher high. What does that mean? That means SMT. That means if you have a bias or narrative, money. You already know that means money, bro. So pay attention. I'm going to go over it one more time. Low, high. There's no lower low. Low, high, lower, low, higher, high. Does that make sense? You need to have to, like, this is a cheat code. This is a cheat code. If you know how to use it in the right times, right narrative. I'm not saying go to the chart and look for SMT everywhere. I'm saying in key levels at key times. Capiche? No looking at SMT in Asia session. Unless you trade that stuff and have data for it. But don't go around saying, Honor, this SMT doesn't hold. Is this a SMT? You guys be sending me unicorns every day of every time frame and every session. Like, bro, I'm gonna say it one more time. These stuff need to happen at a key level. Key level in premium or discount. Those will hold at specific times, in my opinion. Some traders might not agree, but I like specific times. All right, now we're at the trade breakdown, the little sauce. So take a pen, take a paper, get some popcorn, and pay some attention, G. So the trade breakdown, I'm gonna go from top to bottom. So everyone asking me, how do you get your bias narrative? This is how easy it is. So take notes. We have a weekly fair value gap. We tap it and we fly up. What does that mean? We're going up. This was like the first target. We blasted through it. Then we zoom into the lower time frames. We go to the daily. What do we see? We tapped into the weekly fair value gap right here. Then we displaced up, leaving a fair value gap here. We tap it and then we fly up again. What does that mean? That we're going up. Simple as. So we took this high right here and then we're going up. Now I'm zooming into the 4 hour. I'm zooming in and you guys already know I don't like calling tops. I don't like calling bottoms. So I'm just going with the flow. I'm going with whatever price tells me. We see this is what I would call a propulsion block right here. We tap it. And is it in alignment with something? Yes, the H4 fair value gap. And then we're going up. Now here it's a bit choppy, but as I said, I don't call tops and bottoms. I just follow the wave till it sells me out. And then I got instant feedback telling me that price is not going up again anymore. So then I chill. Easy as, simple. So then we come into this day. This was what I saw when I came to my charts. What are we seeing here? Not much, but at that giveaway that we might continue to go up is this H4 range. And we have tapped into discount right here. And now we're like making our way up and we tapped it right here during London and then we're going up. So in my eyes, I'm like, okay, we might as well long it to here. Or let me see, is there price action on the left? No, there is not. So we might as well long it to the all-time highs. That's how crazy I am. So ignore this daily candle right here because TradingView is showing it because I don't know why, but they're just showing the whole candle instead of which price action is available here. So when we go back to the H4, this is what I was seeing. I'm taking you guys through the whole top. That's how easy I'm getting my bias. That's how easy you get your bias. You just follow which premium or discount arrays are getting held. I don't know, whatever it's called, hold or held, but you just check which arrays, PD arrays are getting held. And then you follow it. Easy as. Stop calling tops, stop calling bottoms, bro. I come to my chart. I want to see the 10 o'clock open. I want to see what liquidity points are there. I'm seeing this beautiful liquidity point right here. Let me see which PD arrays am I seeing. We already mitigated this fair value gap right here. There's another fair value gap right here. So this is how I'm going on my day. 10 o'clock opens. Let's mark out the open of 10 o'clock because we want to buy under the 10 o'clock and sell above it. Easy as. So I'm marking the 10 o'clock open right here. Easy as, bro. Stop telling me trading is hard. Is it hard to buy under a 10 o'clock candle open? Like crazy. All right, so I'm watching price action. We open up right here. I'm zooming into the 1 minute. I'm checking. I'm like, damn. We are disrespecting this fair value gap. But why? Why are we disrespecting it? So I'm going to NAS. And I already did my analysis on NAS as well before I hop onto the charts. Because as I said, I'm looking at these two pairs for SMT. Well, I'm not going to go over weekly to daily to 4 hour. We're just going to go to the 4 hour because these pairs move in tandem. So this is our 4-hour range right here. We mitigate this 4-hour fair value gap here. Let me mark it out for the blind people. And then I zoom in. Oh, and excuse me, we have this dealing range, in my opinion. This right here is premium. This right here is discount. And we want to buy in a discounted market. Going to the H1, what do we see? We see that price mitigates a H1 fair value gap when buy fails to do so. Or SPX or US 500, whatever you want to call it. We fail to get into this fair value gap right here when we do it right here. What does that mean? That means there's some SMT at play. So we tap into the fair value gap at a key time. Is a key level, key time. There's SMT going on between this candle. Let's see, 10:05, 8:35. 8:35. Let's see. Is it gonna be at 10:05? See? Like I didn't rehearse anything. This is how I'm literally going in price. 10:05. We have a SMT perfectly. Then we zoom in here and then we displace up. And let's zoom into the 1 minute here. We have a balanced price range here too with the SMT. So what is this telling us? You tell me, what is this telling us? When we move back up aggressively, we have a SMT, we're in a key level, it's a key hour. Like your monkey brain should go crazy, like long. That's how you get a bias, that's how you enter a trade. So I was on the 30-second, and when I was looking at the 30-second, I was like, okay, I can enter here, but let's say I chickened out because I'm not that advanced yet in these pairs. So I'm taking it slower. And then we had this beautiful break right here. This to me, my monkey brain went on. I'm not sure where I exactly put my entry, but I really wanted to put it as the candle closed. So when this candle closed, you know, open, low, high, close, candle closes here. I wanted to entry. And I usually put my stop under here or under this low. And then you already know how I'm rocking with standard deviations. And then we take our Fibonacci tool, aim for 2 standard deviations, and it's beautifully in alignment with the all-time high. Make it make sense. Make this precision make sense. Can you do it? I can't, but... And then we just entry right here, and let's play price out. Guys, let me tell you, I was shitting my pants here because ideally I would not want to see price come back down that much, but as we know, price is not perfect. I cannot demand stuff from price. So imagine I choked my stop under this low right here. I would have gone stopped out for, let's see how much. It looks like 60% of my risk. So I don't move my SL until we get like new structure on the 1 minute or the 5 minute. So while I'm managing my trade, I'm looking at the 5 minutes and I was like, okay, if we close above this block, like I know I'm making some bread. So this is like the, let's say M5 reclaimed order block. Let's call it that. I don't know what you want to call it. Like I don't care what you want to call it as long as you're making bread. Let's just call this M5 block, okay? So once we saw us closing above it, I was like, okay, like I think I'm gonna make some demo money. We went up. And then I took my profits right here, I think, because I thought this was 2 standard deviations. I couldn't properly tell. But you can't be greedy taking profits. Like I just took my profits here beautifully for a 1 to 3 RR. I think it was even more because I choked my stop loss on the candle. So a beautiful 3.49 RR, you could have just bagged like that. And then I let the trade run because I was anticipating this 4-hour candle to just be like a big white candle. And this is where I made a mistake, because if we are not following through on this fair value gap right here, like what are the odds that we are going to follow through here? You know what I mean? But yeah, I'm still learning. I'm not afraid to show my mistakes if you guys can learn from them too. But you still, this is how easy trading is. You don't even need to have the correct bias to make money. You just eat a little piece from the pie. You don't get greedy. When you get greedy, that's where you lose it all. I could have been greedy. I could have been like, okay, I need this to go to 4 standard deviations. And then I could have round tripped this whole trade. But as I said, I took like 50 or 70. I think 75% off here. And then I let it run. As you guys can see right here, let me remove this fluff. Remove the 10 o'clock open. Let me show you guys the 4-hour candle. Look how beautiful it is. Open, low, high. And it didn't close right there, but still. This is how you want to trade. Like with this logic behind it. Okay, so we have another unicorn happening here. But I was not too scared. Because I know like at these key levels, price tends to move like this to fake in buy sellers or buyers. So I was managing this. I was looking at this position, managing it. I was like, okay, if we follow through hard, then I'm just cut the trade. And seeing this M15 breaker, I think. But this is not a breaker because we didn't sweep the low like we did on the other thing, other pair, other instrument, whatever you want to call it. But I was looking here. I was like, okay, ideally, price would want to go up from here. But then I was again like, we're in all-time high territoriums. So I don't know how price will react at these points. So when I saw this, I'm pretty sure I saw like this unicorn happening to the upside. I was like, okay, if this one holds, this is a clear indication to me that we're going to continue up. Like I'm even teaching you how I manage a position. Like tell me another influencer that does this. Because these are the questions I had when I didn't understand price. So I see this other unicorn going to the upside and I want to see it hold. I want to see price fly up from here because ideally price would just fly up from here. When I saw this price action, I was like, okay, this doesn't look good. We're still respecting this block right here, this breaker. And then I just got my trade somewhere around here. So I exited my trade around there. And that will be around 2.3 RR. Let's just call it 2 RR. For the sake of being humble, I guess. I exited my last position around 2 RR. And then it dumped. And that's how you manage the position. Like it's that simple. And then price just consolidated and flew down. And this is really funny because when it flew down, let me play out NAS too. What do we see? A SMT at the tops before it flies down. Make it make sense. Like how? Like make it make sense. How can this happen so precisely? Let's see. 1205, 1100, 1100. 1205. We filter rated here. But we rated here. Make it make sense. And then we drop. So if you're like one of these little crackheads that trades every single move, like this could have been a move for you. And this is how I traded this. My whole thought process. Maybe I forgot to add some things. Maybe I'm leaving some secret sauce out of it. But this is all you need. This is truly all you need. This is all you need, and then some good psychology, some confidence, and you will go far. I'm thinking if I forgot something or not, but nah, this was literally how I managed the position. Like even when I saw us closing above this block here, I was like, yeah, this would be like, in my eyes, the 5-minute breaker. If not, this would be. But yeah, this is how I manage it. That's how easy I manage it. Just a beautiful trade in my eyes. I just gave y'all some crazy sauce. So please like, comment, share, and subscribe.